Good afternoon or good morning. This is a Grab the Mic webinar from the Beam Exchange. My name is Mike Albu, and I'm director of the Beam Exchange, which is a platform for sharing information, knowledge, and experience about using the market systems development approach. And today we're very privileged to have 4 speakers who are going to be talking about a very significant and successful program in Ethiopia called LIFT. Which was involved in land certification, but went much further than that, using a market systems development approach to really ensure benefits for poorer people and farmers in Ethiopia. I'm not going to say very much more about LIFT because we have Andy Smith, who was the team leader on the line, and he's going to introduce LIFT and the other speakers. So over to you, Andy.
Okay. Thank you very much, Mike, and thanks to the Beam Exchange for allowing us this opportunity to present on the Land Investment for Transformation program and how that program managed to break new ground in applying a market systems approach to a high volume land program. My colleagues that will be speaking to you today include Ignacio Fiestas, who is the LIFT Market Systems Advisor, Solyana Amsalu, who was LIFT Team Leader for Market Systems Component, and Enrico Neumann, who was the LIFT Monitoring and Evaluation Manager. I would just like to give you a brief overview of what I can only describe as an exceptional program. The Land Investment for Transformation, or LIFT program as it's known. I'll give you a brief overview, and then my colleagues will look into the market systems development aspect of the program in more detail. LIFT was a 7-year program and came to an end in July of last year. The aim being to improve the incomes of the rural poor and to enhance economic growth through 4 components. The first of these was registering 14 million georeferenced land certificates, second level land certification, as it's known in Ethiopia. The main difference between second level certification and first level certification is that in second level certificates, a plan and map of the parcel extent are shown on the certificate as highlighted in the slide you're looking at. The second component was about building on that high volume certification process and maintaining the registration of these parcels through improving Ethiopia's rural land administration systems. And this was involving implementing computer systems, delivering training to make sure the Ethiopian government could maintain the register after the program had completed. I'll not say much more about component 3. This was about increasing the value of having a second level certificate by applying a market systems approach. My colleagues will talk much more about that. And component 4 was really about improving the policy and institutional environment. And this was done through a considerable amount of research, preparation of guidelines and policy papers that ultimately allowed the program to change legislation to support program initiatives. The program worked in 4 regions right across the length of Ethiopia: Tigray, Amhara, Oromia, and the South region. Each of these regions had their own individual priorities and also their own legislation, and in many cases their own language, which created its own challenges for the program to address. But that we successfully built very good relationships with each of the regional governments that we worked with. In terms of the summary of results, just to give you a flavour of the scale of the LIFT programme, it was the Foreign Commonwealth and Development Office's largest land programme with £73 million of investment, over 2,000 staff involved at its peak, and 100 vehicles available to navigate the 4 regions that the programme worked in. And importantly, it was the first large-scale land tenure reform program to include a market systems component. And it did this extremely successfully and performed very well. The program scored A++ or A+ in the last 3 annual performance reviews. And this was done through delivering over 16 million parcels against a target of 14 million demarcated, and importantly, in terms of gender and social inclusion, 90% of these certificates included the name of a woman on that certificate. And this was all done very effectively and efficiently at a cost per parcel of £3.49, so well under the sort of benchmark cost of efficiency of $5 per parcel for any land administration program. And overall, it's fair to say that LIFT had a very significant impact on farmers. Over 13 million certificates were distributed to over increasing tenure security for over 5 billion households. And through the market systems development approach, certificates were leveraged to access credit, to increase rental transactions, and also overall to increase the sustainability of the program. And as a result, farmers in Ethiopia invested more, productivity and incomes increased, and through the approach taken for gender and social inclusion, there was a strong impact on women and vulnerable groups. And just in summing up, I'd also like to say that, and you will hear more about this from my colleagues, but monitoring, evaluation and learning was a very significant part of this program. Understanding what was happening, being in a position to respond quickly when challenges arose, it was a vital aspect of the success of the LIFT program. So I'd now like to hand you over to my colleague, Ignacio Fiestas, who will tell you more about the market systems component.
Thanks, Andy. So basically, as Andy mentioned, LIFT was the first land tenure program that includes a market systems component in it. So until LIFT happened, most theories of change for land certification programs largely assumed that improved land tenure security would lead to increased investment and increased productivity and incomes of farmers. And there's people like Andy, for example, or even John Leckie is part of the participants who are very land people, and they know and they can explain a bit better also that was the case. I think what made LIFT different is we included the MSD component that basically addressed the transmission channels through which this improved tenure security translate into increased investment. And what are these transmission channels? One is a more efficient allocation of land. That is, the land rights or the right to farm land can be transferred to those with more productive capacity. And that could be, for example, that say all the farmers can basically rent out the land to younger farmers who can farm and make the land more productive. The other transmission channel would be increased access to finance. And that is, I get a land certificate, and then I go to the bank and I use it as collateral to basically get a credit and be able to invest in the land. And the third way, the third reason would be improved land tenure security would give you, as a farmer, increased incentives to invest in your land, also longer duration and do so more sustainably. And basically you would be able then to, or you would have the incentive to buy improved inputs or to plant some trees in your land, and that would allow you to increase productivity as well. Now, following some in-depth market assessments that we did in Ethiopia, the key thing is that these transmission channels were not working effectively in Ethiopia. On the land side, there were severe restrictions on the policy framework, and for example, land cannot be sold or bought in Ethiopia, and land can only be partially rented out under some conditions. Besides the legal framework, very importantly, there are very strong social norms that basically make farmers reluctant to rent out the land, because then farmers basically think lesser of them. And then on the area of increased incentives, basically it's the constraints that existed in the agricultural market. And importantly, on the access to finance, basically the legal framework did not allow for farmers to use that rural land certificate as collateral. So that was not allowed in Ethiopia. So what we basically did is we designed interventions in 4 sectors: rural land rental, access to finance, agriculture, and dispute resolution. In these 4 areas of intervention, the rural land rental, it was largely about helping to develop a set of, we call it land rental service providers, or we would more simpler, rural land brokers, to basically go and facilitate the exchange of information and facilitate rental production, as well as a communication strategy to change the perceptions on renting land out. On the access to finance, it is about this new agricultural loan product linked to SLT and a related insurance product with it. On the agriculture sector, we focused on enhancing the distribution of improved inputs and also improving farming practices. And the dispute resolution sector was more focused on addressing those constraints around the land administration system. Arguably, out of all these interventions, the most successful one was developing the agricultural individual loan product. And that is what now we want to present a bit more in depth, and Solyana will be doing that.
Okay, thank you, Ignacio. In the next few slides, I'm going to provide highlights of what the project actually did and also share some of the results achieved. So what we did, we worked with the government and microfinance institutions to design an agricultural loan product specifically tailored to farmers with second-level land certificates. As this was new for the MFIs, government and other stakeholders, the project closely followed up the pilot implementation and applied strong M&E enabled to address implementation issues at early stage, adjust the product, and make it more relevant to the needs of smallholder farmers. This allowed MFIs to both offer higher loan amounts to farmers and attract clients who previously did not have access to formal credit. We also worked with regional governments and MFIs to develop working procedures between the MFIs and the government and adjust the rural land registration system to the product needs. LIFT promoted early transfer of ownership of the loan, and we did not offer any funding to partner MFIs. Rather, MFIs were requested to allocate own funding and set targets considering their financial capacity and risk analysis. I think this promoted early ownership and investment to roll out the product. Post-piloting, the project focused on strengthening the capacity of MFIs so they could expand the product. For instance, LIFT facilitated cost-benefit analysis training and technical assistance to partner MFIs. And this helped them to understand how profitable the product was and accordingly adjust the price and other features of the loan product. Finally, the project helped create a conducive policy framework for the new loan product. As Ignacio mentioned earlier, there was no legal framework that supports the use of land certificate as a collateral. Hence, it was crucial for the project to constantly engage relevant stakeholders, policymakers, and share evidence-based results of the pilot and influence decision of stakeholders. We also produced research notes, policy briefs, and engaged champions of change to influence opinion. Moving on to the results, as you may see, 8 MFIs in 147 branches promoted the loan product and dispersed more than 22,000 loans with a value of more than 720 million Ethiopian birr. This is equivalent to 13.1 million pound. In terms of policy results, Amhara Regional Government and National Bank of Ethiopia approved proclamation allowing for the land use right to be used as a collateral. As I mentioned earlier, MFIs continue to invest their own funds and roll out the product to non-LIFT targeted woredas. Okay, this slide is just to share some findings from the field where we interviewed a lot of farmers and gather information on how they manage the loan. Just to share some examples, farmers indicated that they were able to diversify their cropping and repay back their loans timely. For instance, we interviewed Seman in Silti Warada, and he explained how he used his loan to diversify into different income generating activities, such as sugar cane, maize, vegetable production. And when flooding occurred, he could still repay back the loan on time. We also learned that the product benefits women and vulnerable groups. And then a 65 years old from Amhara explained how the loan helped her to hire labor and diversify her production from only cereal production to high value vegetables and coffee. We also spoke with Matheus from Bora Warada in Oromia region, who utilized the first loan to invest in irrigated vegetable production and hire 10 additional permanent laborers. After repaying the loan, he applied for 2 more loans within a year and expanded his business. This shows that the demand for loan is strong, and this was the same across all the pilot regions. The next slide, or this slide, is just to show the AAR framework, how this intervention able to achieve large-scale systemic change. I won't go in detail over all points, but the story change is that LIFT supported MFIs adopt the new loan product, and MFIs adapted the product to client needs and invest their own resources to roll out the product. And the new loan product is being copied by other financial institutions, expanded to non-LIFT waradas. For the system response, the regulatory framework has been adjusted reflecting a change in attitude of government with respect to the ability of farmers to use their land as a collateral. This is from my side, and now the next slides, Enrico will showcase some of the outcome level results of this intervention and the direct impact it had on the lives of the smallholder farmers. Over to you, Enrico.
Thanks a lot for that, Solyana. Hi everyone, my name is Enrico Neumann. I was the M&E manager on the LIFT program. And I'm now going to talk about some of the evidence that we've collected on the impact of the loan on investment, productivity, and incomes of farmers, and also on the incentives that the loan set to register land transactions, which has an impact on sustainability of the overall land system. But first, let me say that LIFT as a program made a significant investment in monitoring, evaluation, and learning to ensure that rigorous evidence on the theory of change is collected. Now, this included a large male team, including myself being based in Addis Ababa, and regional coordinators who would help collect data on a periodic basis. It included frequent field visits where we collected qualitative information, like the short stories that Solyana just mentioned. But it also included, and most importantly, very rigorous and large-scale household surveys to test the theory of change assumptions. And with these surveys, we ensured that they were representative of the beneficiary population, ensured a methodology that allows us to generalize findings across the population. Now, we conducted a lot of large household surveys across the years. But today I'm just going to talk about 2 of them, which are relevant to the loan that Solyana just spoke about. To the left-hand side on the slide, you see just a high-level findings from a survey that we did just on the market systems development component and on the loan. The MSD impact assessment, we interviewed 1,360 beneficiary farmers who had actually taken out a loan, and this was a panel study. We followed up on the same individuals over 3 years' time. And this allowed us to compare the situation of these households from before accessing the loan to after accessing the loan. Now we asked very detailed questions about which inputs were applied, how the loan was used, how this impacted on yields, and how repayments went. And what we found is that the loan was indeed invested to increase the quantity, quality, and variety of inputs applied, and allowed farmers to diversify towards more high-value crops. Now, together, this allowed farmers to increase their production value and achieve higher incomes. Even after repaying the loan plus interest, we were able to establish that there was a profit left for these farmers, which they were able to either reinvest or spend otherwise or save. And it also, this is triangulated through qualitative findings and statements by farmers who then also went back to take out a second or third loan. Now, this also is evidence on the fact that the loan is commercially viable, also from the MFI's perspective, with farmers coming back and establishing a credit history and being able to take out even bigger loans the second and third time around. Now, this is evidence on the economic benefits of the loan and the additional economic benefits on top of the land certificate that we've discussed. On the right-hand side, this is a different survey that we undertook, where we wanted to understand the sustainability of the land system. And the registration survey, we interviewed 9,600 farmers across the 4 regions that we were working in. Now, here we are checking whether farmers, after receiving the land certificate, actually went back and registered changes, for example, after inheriting land or after gifting land to other farmers, whether those changes were registered. That's important for the system to be sustainable and for not having to repeat the whole exercise after a couple of years. Now, what we found here is the locations were evenly distributed between areas where the loan could be accessed and areas where it couldn't be accessed. And we found that indeed, in those areas where the loan could be accessed, farmers were more frequently registering changes to their land certificate, which is an indication that it sets incentives to register transactions. Now, what does all of this mean? Let me take a brief step back. What does all of this mean in terms of the overall theory of change of this program? Now, land programs often face problems with sustainability. Administering the initial land certification is always the first step, but then making sure that subsequent transactions are registered and the land registry and the cadastre are kept up to date, that is often a challenge, as farmers not always see the value in doing that. The market systems component here address these two issues very well. The one issue being addressing constraints in the market systems, increasing and accelerating economic benefits. On the other hand, setting incentives to register transactions. Now, you can see this in the diagram here on the slide. The initially issued land certificate allows you to access a loan. To access the loan, you need an up-to-date certificate. So over time, you would be incentivized to register with the land authority. And that is the virtuous cycle that keeps the registry up to date. Now, what is this telling us? It's telling us that this innovative theory of change did not only accelerate the economic impact and benefits for farmers in terms of their incomes and offering additional benefits on top of the land certificate, but it also increases sustainability of the land register, overall increasing the overall value for money of this program. I'm now going to hand over to my colleague Ignacio to wrap up the session.
Thank you very much, Enrico. So in order to wrap up, we wanted to basically share with you 5 factors that we thought were key drivers of success of the LIFT program from a market systems development view, but also from the wider program. And first was the ability of the program to adapt the market systems development approach to a land tenure program in Ethiopia. And this was essential given the political reality of Ethiopia, given how contentious, as we all know, the issue of the topic of land is, and also the level of government intervention in all markets. And that basically also required a lot of co-designing and co-implementing together with the government and with the private sector. The second point was the importance to the need to basically think and work politically. And this is something that applied in all the different components of the program, but it was particularly also challenging on the market systems component. So for example, we were talking earlier about one of our interventions being the rural land rental market and trying to develop what we call land rental service providers or rural land brokers. And in order to demonstrate that concept and introduce that element into the system of private sector providers of brokering services, it took 3 years. Year one, we basically demonstrated that we developed the concept of rural land service providers and basically help them supported farmers to provide those services, but they were not allowed to charge any money. But it was to prove to the government that they were providing a useful service that had a very positive impact on people. In year two is when we were able to introduce the concept of payment. And then in order to prove the fact that they didn't have to get paid in order to make the provision of services sustainable. And only in year three, we could basically also introduce the concept of licensing and certification of these rural land brokers. So we did have to break all these down in different phases, whilst in other places we would have done all in one go. Third, as we've talked several times in the presentation, is about generating this strong, credible evidence. Now, I think the importance is basically how we use that information. And we were able to very efficiently, I mean, we communicated not only the successes, but we also communicated a lot of the failures. And that allowed us to basically engage with government largely and with private sector as well in conversations on how best to adapt those interventions. And this basically allowed the program to be trusted from a government point of view, to be perceived as an honest broker, also from the private sector point of view. And I think that really strengthened the ability of the program to make changes on the ground. The fourth driver of success is being flexible and adaptive. Now, there's a lot about that on market system development programs, and LIFT was not different from that. We developed an initial portfolio that we had to modify, we had to adapt interventions, we had to terminate some interventions. And I think that was an important element to be able to get to the final list of 9 interventions that we shared earlier, and they were successfully implemented. And the fifth point is the importance of accepting and taking risks. And this is because given the duration of the LIFT program, which was 6 + 1 years, and there being a 7-year program, basically we were able to engage into some interventions, and the loan product is the best example of that were very high risk, but we were still willing to take those risks and go for it. And I think we also have to recognize there was important support from the client in order to take these risks and take that journey. So overall, LIFT was a very successful program as we've presented, right? And this is just a quote from the LIFT annual review report in 2017, talking about being the largest, fastest, and cheapest land registration program, how innovative the MSD interventions were, and this basically offered a lot of rich opportunities for lesson learning. We've captured a lot of those in the LIFT Economic Empowerment Component Completion Report, or the Market Systems Report, which is available on the BIM Exchange, as well as a lot other evidence and research and publications that LIFT was able to put out, many of them available in the BIM Exchange, and I believe Isabel will share the links on the chat. And there's, as I say, a lot of information out there on the BIM Exchange. And that's basically I think what we want to share with all of you. Thank you very much for your attention, and we are ready for question and answers. Thank you very much, Mike. Off to you.
Great, Enrico and Ignacio, Andrew, Solyana, that was fantastic, very interesting presentation. We have got a couple of questions coming in, and I encourage everyone who's listening to put in more questions into the Q&A box, because we're going to run out soon if you don't. And I'm sure what you've heard has got you thinking. But let me just start with the issue of women. How did women and other sort of more marginalized farmers or non-farmers, landless people, how were they affected by this program? How did they benefit from it? Solyana, can you tell us about that? Solyana, you're muted.
Oh, can you hear me? Sorry.
Oh, I can now, yes.
Yeah, okay, thank you. I think I better answer this question by sharing a story that I just remember from the field. So I interviewed a woman with 5 children, and her husband died, and she could not manage the farm activities because in Ethiopia, farming is mostly managed by men. So she approached a woman group so that she can access loan from the MFIs. But the group couldn't let her in. Without, her husband. So because if she fails, the group members will be responsible to pay. So then she heard about the new loan product, MFIs were, but she did not think that she can access it individually. So, and then she, approached the MFI officers and show her land certificate. And she was able, the product really helped the excluded groups to have access without any pressure or any exclusion from the community. As long as they have the certificate, MFIs plan their capacity in terms of and the payback. So this is the measurement that they take along with the land certificate. So in addition to the story that I mentioned earlier, it really helped, this product really helped women and vulnerable groups. I hope I answered this question.
Thank you very much, Solyana. We had a few technical issues with the sound there, so we will, but I think we got the gist of what you were saying. Thank you for trying your best. That was helpful. Can we move on to a question from Jill Majeros, if I pronounced your surname correctly there, Jill, which is in the Q&A box. And thank you, by the way, for people who are starting to put questions there. But I don't know who might be the best person to answer this, but Jill's asking for the rental sector and for the dispute resolution services that you were involved with. Did LIFT have to support new businesses to start up to do that, or were you able to find existing businesses to collaborate with? I'm not sure who the best person to answer that one might be. Would that be maybe you, Ignacio?
Yes, sure. We basically worked with startup businesses, right? There were no, in Ethiopia, the urban and rural land sectors are divided from a policy point of view, from a legal point of view. And although there are urban land brokers, in the rural areas, there were no rural land brokers. And there was, the government actually proactively did not allow that to happen. So the work that we did with the rural land service providers was basically working with people from the communities who basically had that ability, a bit of that entrepreneurial ability and that knowledge ability to basically play that role and start providing those services on the side of other work that they had. So this was not their only business. It was one of the activities that they were doing. And as the evidence built up and they were able to charge for those services, it became a more relevant part of their businesses. But it was all with startups. And also on the dispute resolution system, we basically working with there was some figures in the wherever city or wherever town capitals that basically were kind of informally helping on the legal side, and those are the people we basically work with to be able to provide some of those facilitation services to farmers. But I would call them all startups.
Right, okay. Thank you. I'm just trying to see if there's any other questions related to the same sort of issues. I think not. Can we just look at the loan products? There was an interesting question from Nadia Namkin about the actual practice for MFIs of responding to dealing with defaults and so on. How easy is it for the MFIs to repossess the land certificate if there is a default? And why did you choose to work with MFIs rather than with banks, for example?
So I can reply to this question. So in terms of repossession, the MFIs cannot repossess. Rather, in case of default, the law allows them to rent out the land to anyone interested and repay back the loan or the outstanding amount. So land is the property of the public. So the farmers don't have ownership right, rather only have use rights. So they cannot, MFIs cannot possess the land. They can only allow to rent out. So this is, in terms of the second question, why we worked with MFIs, because, for banks, actually we invited everyone, but banks were not interested to pilot as it involves high transaction to work with, Avale level or Warada level farms. So the closest were the MFIs. MFIs there to serve the rural community. So we worked with them, and there are also rural saving and credit cooperatives, but they were not part of the revised proclamation. But recently, they're working on the revision of their proclamation to allow credit cooperatives to extend this law, this product.
And Solyana, could you also maybe address the question that Patrick McAllister wrote, which I know you answered it and you've written a little bit there, but maybe you could say something about what kind of policy changes were needed at national or regional level, and what were the incentives for the government to change policy?
Yeah, so as I just mentioned on my presentation, the federal and regional proclamation did not include or did not allow the use of land certificates as a collateral. So we start piloting. We've started to engage government at federal and regional level to include this in the proclamation, to include this and approve it. Accordingly, we engaged share evidence from the field and able to influence their decision. And now in the federal and regional proclamation, use of land certificate as a collateral.
Thank you, Solyana. Let's.
Sorry, Mike. Can I just add
yes.
shortly about that? I mean, to me, that was one of the massive successes of the program, right? The ability to change that legal framework in a country where, again, you could not use land because there was the fear, right? The farmers would lose the land, to basically changing the proclamations in order to allow farmers to do that. And I think that was a combination of basically the pilots were able to show at different levels of government the positive impact on smallholder farmers, right? And how this really had a transformational impact. And that was not affecting, or that was not influencing, you would say, the very high level policymakers, but that was influencing the land officers, right? At the wherever and the regional level. And in a way, that allowed a lot of that, in a way, pressure for change to go up, and then to spread basically the positive impact that this was having. At the same time, as there was quite 2 or 3 very key figures in Ethiopia that we managed to engage, and that includes the Director of Financial Inclusion in the National Central Bank, or it was the head of AXI, which is the largest microfinance institution in Ethiopia, now became a bank. And they really bought into this project, and they really helped us navigate those levels with the policymakers to try and get those changes to happen. So I think it was a combination, it was a bit of the perfect storm happening that allowed us to have that big success.
Thank you. So just to clarify, I mean, because there was another question from an attendee about whether the MFIs were given any kind of financial support or capital from LIFT to enable this expansion. Can you just explain what kind of support, if any, the MFIs received from LIFT?
Solyana, you want to go ahead? I think we lost Solyana briefly, probably. So I'll just go ahead.
Thank you.
But we basically, we didn't offer them any financial support like loan capital. Mm-hmm. What we basically gave them is the technical assistance support to be able to, on one side, right? This is the project, the product, this is what we can do. But I think even more important than that was the facilitative role that we played with government. There had been a similar initiative a few years before trying to develop such a product, and it failed because basically it got blocked from the government point of view. And basically what the team there, and Solyana was capital in this process, was basically facilitating and getting MFIs to speak to the government offices, to the land offices, and polish all the issues that as they were coming up, right? And try and make sure that there was understanding and trust was built between them. And that is what allowed us to basically move the pilot forward. So there was a bit of TA, and then as Solyana presented, a bit on the capacity building of MFIs and helping them navigate through what this new product means. So a lot of work was done on the default management, because that was a big fear that they had. What's going to happen if a farmer defaults? Are we really going to be able to recoup our land? And actually, we already have 2 examples where MFIs went to the courts and they claimed for repossession of the land, and it was given to them, right? So the system did prove working, at least on 2 occasions so far that we know. And
that's very interesting. What was there's a question here which I think follows on from this, which what was the attitude of FCDO to this risk taking, and were they comfortable with LIFT strategy? And Albena also asked what it would take, do you think, for commercial banks to see farmers as being bankable in the longer run and move away from MFIs, maybe? Does that question make sense?
Do you want me to answer the FCDO part?
Yes, please.
Yeah.
Yes, please, Andy.
I mean, I think that was extremely important, and it's something that we became very aware of. With it being a big land certification program, we very quickly, once the certification program got underway, started to get some quite big results, if you like, in numbers in terms of certification. But at the same time, the market systems component was running alongside and trying out various initiatives to see what works, what doesn't. So I think it's fair to say, well, we relied a lot, and to their credit, we did get a lot of patience in terms of FCDO, in terms of results. I mean, there were questions initially, I think it's fair to say, in terms of why is the certification process going ahead so quickly and why are we not seeing the same sort of numbers for market systems. But once there was an understanding from all of us that the certification process needs to go ahead, it needs to be implemented, farmers need to have their certificates, then once that was underway, and we had the agreements with the MFIs and the governments about allowing this individual loan to go ahead, that's when the pace started to pick up. So I think patience was a very important aspect of this, isn't it, in terms of the way the program was set up, and in particular the market systems component. The commercial side, Ignacio, do you want to add?
I would just add one more thing. I think one of the things that was a blessing for us is on the FCDO side, you have a senior responsible officer, and that is the person that follows the program during the life of the program. Now, in many of our programs that we've experienced, they change, that person changes every 2 years because there's different rotations. And in LIFT, we're able to maintain that same person from the design phase all the way until practically the end of implementation. And I think that gave a continuity from the side of the client, that gave a knowledge and understanding of all the different steps. There was all that institutional knowledge. And I think that made a massive difference in terms of us being able to take certain risks.
Thank you. So let's stand back a little bit from this then. There's a really great question here from Catherine McCullum, but there was also another one about how transferable is this model to other regions in Ethiopia or possibly to other countries. But particularly within Ethiopia, there are other parts of the country where land is managed in different ways with more traditional systems or with a lot of pastoralists and so on. How does that affect, do you think, the replicability of this model?
I mean, I think the program can be used in other regions. In fact, we know that although LIFT was only working in 4 regions, there was at least one other region that started to implement the individual loan before the program completed. So in terms of replicating what had already been done, that was a very positive sign. Yes, it's correct to say pastoralists, it's a whole, if you like, a different issue there in terms of the land holdings, and it's something that there was a US aid program that was very involved in looking at that. We were not involved in LIFT and working with pastoralists. We were working in the 4 highland regions, but it was not, we didn't get involved in what could be quite a complex issue in terms of pastoralists, and that's something that would be different if it was being applied in some of the other Ethiopian regions. But certainly, like for like, it already has been proved that it works in other regions. I think the main things that we needed and found were beneficial were it was the support and the commitment of the regional governments to work with us on this, and the support of the MFIs in that region. If that's there, then there's every opportunity for success. Thank you.
Anno Galema asked about whether, given your intense sort of focus on MEL and looking at both successes and failures, is there anything you'd like to give us examples of things that didn't work so well and how that was managed and dealt with?
Maybe Ignacio, a good example would be about how we were working with compost hubs, which was where we were trying different innovations in the beginning of LIFT, right, and ended up with the more successful ones that we presented today and that Ignacio talked us through today. But through the MEL that we were applying very high frequency amount of MEL, so to say. So we had monthly data collection, we had quarterly qualitative data collection, where we try to understand where our pilots are going already early on, so that we can pick up on issues as they arose in a sort of timely manner. And one example of where we really identified that innovation isn't as scalable and it's not really being picked up by the market was working with compost hubs. And the review of the intervention based on the MEL and data that we had then led to us recommending to discontinue that part of the program, which I think was the right decision. But yes, we had that flexibility to also talk openly about not only successes but failures, which of course helped with that discussion and making those sort of decisions.
I mean, for example, sorry, just another example. When in Ethiopia at the time, there was a program that was trying to set up a new weather-based insurance scheme, right, in Ethiopia. Mm-hmm. And we were trying to liaise with them, so they would use the geolocalized data that Lyft was producing for all the different parcels in order to make the process more efficient and make that pilot succeed. That was a government pilot with Kifia, an IT entity. And we worked closely with them for a couple of years to try and make this work and get them to use the geolocalized data, and it didn't work, right? So then we had to take a different path in terms of the insurance intervention. But the EU completion report that was mentioned in the very last slide, that captures a lot of the failures and successes as well of the program.
Thank you, Ignacio. There's a question here about some of the sort of other benefits of the program from Mark Thomas, who obviously has a stake in this. But Mark asked an interesting question. He said, you mentioned that increased tenure enabled farmers to invest more sustainably in their land. Did you see any environmental impacts, therefore, from that improved tenure?
Maybe I can take that yes, question. Enrico. It was actually quite interesting. There's another study that we did that we didn't talk about today, but in 2021 we did another impact assessment on the investment incentives, and especially how the certificate incentivized more long-term investments. And we found that there is quite a significant effect that farmers started planting more trees, different types of trees. Which is an investment where the benefits will only be felt after several years, and it's a benefit that is handed down to generations, and with higher tenure security and knowing that the land can indeed securely change hands. That was an effect that we picked up on that was quite significant, and we found that in the relation to climate change effects that can help to mitigate some of the different climate effects that Ethiopian farmers might be tackling more with in the future. For example, soil erosion or soil degradation. Planting the right types of trees can help address that. So in a way, there's an opportunity here to maybe also combine future land programs with these kind of climate change interventions, kind of leveraging this tenure security that is set by the certificate.
Very interesting. Very interesting. I mean, this is just a personal view, Enrico, but I mean, I know that when I first started reading about Lyft years ago, the concern, the immediate sort of concern that one has is, well, do these kind of programs just facilitate a process of land aggregation in the hands of wealthier farmers, and does it end up with poorer farmers, more relinquishing their control over the land? And you're saying, I mean, so I'd be quite interested to know a bit more about the data on the transactions that have taken place since the certificates were issued. You mentioned that only, if I understood the slide correctly, only 15% of transactions were registered, or is it that 15% of certificates have had a change? But could you say a little bit more about whether there's any evidence yet about how this process is likely to change the nature of land ownership in Ethiopia, or not? I mean, we're talking about leases, not ownership, but you know what I mean, control.
I think, if anything, then you know, the fact that land is formally registered, you know, increases the tenure security. So at the moment where land exchanges hands, either through gifting or through inheritance, and that is covered by an updated land certificate, where then the name of the new, well, it's not the owner, but the landholder is mentioned correctly. That increases the tenure security, and that person then can make use of that system to, for example, access a loan or securely rent land in or out, and refer back to hopefully less biased institution to help out with these transactions, right? So if anything, we saw that the land certificate supports more vulnerable farmers by increasing the tenure security. I mean, another example, and this is something that came out very strongly, is for female-headed households, for elderly women and widows who are frequently renting out land to sustain themselves because they cannot farm it themselves anymore. And they were in a situation where they were more frequently taken advantage of because they are just more vulnerable in the community. And I guess more dominant farmers were taking advantage of their position. Now with the certificate and with some of the work that the MSD component has done through the fair brokers, those women were empowered. And I think, you know, there are a lot of these dynamics at play. Actually, I think the more vulnerable farmers actually benefit quite strongly from that.
Fascinating. Okay. Well, look, I think I'm going to throw one last question at you, Ignacio, but we are effectively out of time. Before I do that, I just want to say to everyone who's attended, thank you very much. Please give your feedback on what you thought about the webinar. You'll get an email with all the details, but it would be great to hear what you thought. And there's a link in the chat box which you can click on to give that feedback, and then you can find the recordings and so on the Beam website later. But so a last question, really. Ignacio, you've already written this as a written answer, but I thought it was quite an interesting point. But yeah, Yuubda Hailu asked about the process of engaging the land brokers and how you build up trust in that service as a rural service among farmers, I guess. And you talked about a stepped approach. Yes,
I was talking about the stepped approach of at first. Because there were so many negative connotations on rural land brokers. We basically had to work with government to get this in a first pilot, which was only in a few veredas in a couple of regions. It's like to get some people that would play the role of rural land brokers for free without charging for the services. And then we would observe and see what was the impact of having them playing that role. And once we identified what the impact was and how beneficial it was about talking to government to say, here's the evidence and why this is working, but this is not going to be sustainable if you don't get paid. So can we do another pilot to try and test what would happen if they get paid? And at that point, we had to agree with, we agreed with the government, what would these land brokers be charging? It was not left to the market, it was agreed how much they would be able to charge. So then the following seasons, we were testing that model of payment. And when that was successful, then we sat again with government and we told them, or with the land administration offices, and told them, this is working. Now we have to find a way to make this sustainable going forward and ensure minimum quality. So basically, we moved into the certification and licensing of land service providers. And this whole process took 4 years. So it was a very stepped approach, slowly building up that trust. And I think that the key was the time, doing it very slowly, not rushing things.
Fascinating, fascinating. Great. All right, well, that is, talking of time, we have run out. Can I just say a huge thank you to the 4 speakers here, Solyana, calling from Ethiopia, struggling with the quality of the line, but it was really helpful to hear your account of what actually it looked like on the ground, and Ignacio and Enrico and Andrew from various parts of Europe. Thank you for joining us. If you have enjoyed this, please come and take part in the next Beam webinar. You'll find you'll be sent information about that along with everything else. And if, as I said at the beginning, if your organization is interested in presenting, grabbing the mic and sharing their knowledge and experience, please let us know. We'd love to hear from you too. But yes, great. Otherwise, thank you very much to our speakers, and have a great day.